Welcome everyone, and good morning or good afternoon, depending on where you are. Globex Mining is a growth story. We have a lot of projects, and we're increasing the number of royalties as we move on here. So we're going to talk about the various facets of our company and how I see the value in Globex as we move through this presentation. I will make some forward-looking statements. I'll have you read this at your leisure. So, Globex is a combination of several different kinds of company. At heart, we are an explorer. We generate projects and create what we call a property bank. We have a lot of properties, and we convert many of those properties into royalties by selling those properties. So we'll go through that business model again in a minute. We have a very experienced board and management team and a very seasoned group of geologists on our staff. We are focused on acquisitions and established mining camps. About 40 of the projects that we have are past producers, and over 60 of them have either historic or 43-101 resources. This is pretty important. And a number of them have PEA or higher level stage studies, and a number of them are actually under feasibility studies right now. We are in what I consider tier one jurisdictions like Ontario, Quebec, New Brunswick, Nevada, Arizona. We have a very strong balance sheet with over 35 million in cash. Capital structure is very tight. We don't issue warrants, and we have a very low share count. The company, as I mentioned, is transaction focused, so we're trying to earn income as much as possible from either option agreements, property sales, and eventually paying royalties. So as I mentioned, very low share count, 56 million shares outstanding. Management owns about almost 13% of that. That's mostly Jack Stock and his family and a number of the directors. The board is made up of a number of geologists, accountants, and finance professionals. When you look at our balance sheet, if you look in the lower left-hand corner there, cash is a big chunk of it at 26%. Fixed incomes, another 29%. Senior precious metal equities, 32% of that balance sheet strength, and then 13% is in more junior stocks. So very good balance of balanced portfolio as far as risk goes, and ever increasing senior precious metal companies like Agnico Eagle are in that portfolio. I mentioned we're listed on the TSX, a number of exchanges in Germany, as well as the OTCQX. This is our management team. Jack Stock is the founder of the company. He's been running this company since the mid 80s, has grown it to where it is today. I joined the company more recently in January of last year as VP of Corporate Development, and more recently as President and COO. I have about 39 years experience in the business, geologist, equity analyst with TD and Scotia, fund manager with the Dundee Group, past CEO of Eagle Hill and Orford Mining. Both of those companies were sold Eagle Hill to create what is today's Osisko Mining, and Orford Mining was bought by Alamos Gold last year. A number of other directors, past CEOs of Centerra, past Soros funds managers and financiers, and people at the case to oppose. So great experienced board. So as I mentioned, our model. So we acquire properties on what we think are good locations. Either they have previous discoveries, previous resources, or just good geology. For the most part, they have those first things. We don't tend to do a lot of grassroots acquisitions. Then we upgrade those properties. We do some exploration on them. We make discoveries of our own, and then we create option agreements with other groups. So they spend their money on the projects to bring those projects forward. And we end up keeping a royalty if those projects go all the way, and those people maintain their ownership and earn their 100% in the project. So then we get a royalty on the project, and that's how we've grown our royalty portfolio. We bring in income. We're here to make money. Less dilution means increased exploration expenditures for our shareholders without us spending the money, and increases our portfolio value overall. So just to give you an idea of where we are in the world, upper left-hand corner, you see a North American map, a number of projects in the United States, Saskatchewan, New Brunswick, Nova Scotia, Quebec, and Ontario. And the inset map is the Abitibi, probably one of the most prolific metal belts in the world. And we have a lot of projects there, gold projects, precious base metal projects, and specialty mineral projects across the Abitibi. Also have a royalty in Germany. So I mentioned we like to be on prolific structures. So this is just an example of one of those. The big black line you see running across the map, that is the Cadillac Break. runs from on the Ontario side right through the Quebec here. And you can see all the projects and royalties we have sitting along that. Many of them have been converted to royalties, like the Wasamac, which is the Francoeur mine we sold to Agnico Eagle at the left-hand side, the Wasamac property. Then we have our Rouen merger project, which is in red there in the middle. We just finished drilling that 6 holes, over 1,000 meters of drilling, waiting on assays. And we continue to do work on our Wood Cadillac project in the middle, which sits next to Radisson's O'Brien project. Lots of good projects, all on that big break. This is where you want to be. This is where metal deposits are found, and we have a lot of them there. So how have we grown over the years? If you look over the past 20 years, we've gone from about 50 projects, including royalties, up to about 265. Actually, I think that number is wrong now. We're about 270. And so we've grown our royalty portfolio, our property portfolio, and we continue to have a consistent number of projects that are optioned out to others, them spending money. And you got to remember the projects that are royalties, those companies are spending money on those projects, increasing the value of those royalties for us, as well as the groups that have optioned our properties, also increasing the value of those projects for us as they continue to spend money on those projects. So what's the mix of our projects? We are by far more than half a precious metals company. Then a big chunk, about a quarter, is in base metals. And then the other quarter is a mixture of specialty metals and industrial minerals. So we have a good balance of assets. Gives us a little bit of, if one metal price falls, we have a bit of an insulating factor by having exposure to other metals and materials. By stage, you can see here a good chunk of our projects are in the discovery or better stage. Very few of them are in the grassroots stage. On the property side, it's about 21% in the grassroots. On the royalty side, about 16% in the grassroots. Where we want to see most of our projects is in the 43-101 resource, PEA, or feasibility studies. So that's where we're sort of going towards. Historic production is good as well. So we want to see them at least have historic resources, historic production, 43-101 resources, or those higher level studies of PEA or feasibility. If we can get more and more of our projects in those levels, all the better. Increases the value, easier to assess the value on those projects. Just an idea on some of the deals we have done in the past year. Francoeur, we sold that to Agnico Eagle, $15 million, just got the last payment on that recently. We did a deal recently on the rare earth project in Arizona with Arizona Passage Heavy Metals. We did a deal with Bria Resources, which is now Albright Metals in New Brunswick. These are just some of the deals we've done in the past, and we have other projects we think will be good ones to sell in the near future because of the market for them, like our Scandium project in Quebec, and things like our other projects that are along the Destor Porcupine, like the Porcupine West project. So we have a lot of projects we think are going to be wanted by others in our portfolio. As I mentioned, we're transaction focused. In the past year, we've staked well over 235 claims. We've done 3 new option agreements. I think we're working on others right now. We've bought back royalties on 3 projects. We've consolidated ownership of the Blackcliff property, and we've done a bridge financing for a company starting up a Chilean copper asset in Chile. So we're moving. We're looking at lots of things, and we will continue to look at more and more as we move forward. Just to give you an idea of some of our partners. So this is just a small bit. So from Albright, as I just mentioned, up in the right-hand corner there, down to Radisson in the lower left-hand corner, IAMGOLD, Lincoln Gold Mining, Cerrado, lots of companies. Lots of them are big. Some of them are small, but all working on our projects and bringing them forward. So I'm going to divide the company up into 3 sort of parts. There is the 100% owned projects that we explore ourselves, that we own 100% of, and that we continue to explore. Then there's the projects that are optioned to others, that they're spending money on to earn their interest. And then there are the royalty projects where people are spending money on claims that we have significant royalties on, that would be very beneficial to us if they go to production. So we'll start you with the Cadillac Wood project. This is where the Ironwood deposit is that we outlined this past year, 108,000 ounces of indicated resource, another 8,600 ounces in the inferred category. It's a good compact deposit there. We're looking at ways of assessing that and moving it forward towards production. We also have two other deposits on that same project, the Wood and the Cadillac, which total of 241,000 in historic ounces. We're assessing what to do along that strike length, and I'll say why in a second on why we think that's an important project for us to be looking at. On the right-hand side of the slide is the Rouen Merger project. We completed 6 holes in November, 1,095 meters, targeting historic mineralization of what we call the East O'Neill showing. That's 1959 drilling there, and the grades were up to like 7.08 grams over 10.27 meters and many other intersections. So we just finished the drilling on there. Of course, we're sampling an entire core. Back in the day when that was drilled in 1959, they probably just sampled the veins. We'll see what we get back on that drilling and see if we can extend the size of that mineralization. Then in the center here, we've just started this drilling as of today. We've got a drill on site, drilling the first hole at Lyndhurst. We are looking for Kidd Creek type mineralization here. Kidd Creek is one of the biggest volcanic massive sulfide deposits in North America. Lyndhurst had historic copper production up to 1.93% copper. So we're looking for that kind of mineralization. And we're excited to get the drill in there. We have the geophysical target there we're drilling. So on the Wood Cadillac project, you can see the ironwood deposit up in the upper right-hand corner of the map there. But then you see, the Cadillac, the Wood Cadillac, and the Kawagama. So to the left of our project is the O'Brien project, which sits where the Kawagama royalty is. That's where Radisson is drilling 140,000 meters. We'll talk more about that later. And it's the same Pichet group, that pink group that runs right through the middle of the Wood Cadillac. That's what they're drilling. We haven't been drilling that in quite a number of years, so we're assessing what we could do on that strike length of the break that runs through our project there, as far as finding additional mineralization. On Rouen Merger, you can see the red circle in the center there. That's where we drilled the East O'Neill showing from 1959. We've drilled 6 holes. We're looking forward to seeing the assays on those holes in the next few weeks. Should have all those assays back before Christmas, I think. Then Lyndhurst, you can see here a number of showings across Lyndhurst as you move across it. The Minova showing, grab samples up to 6.6 grams per ton silver. The deep zones at Lyndhurst West. The mine horizon, 1.93% copper and 12 grams silver. We're drilling that untested Titan EM anomaly. You see it circled in red there. It looks really interesting, highly altered felsic units in that area. We're excited to get in there and get this drilling done and see what we find. So moving to the royalty side of things, I was just talking about the Kawagama and the New Alger and the O'Brien project that Radisson is drilling. They're just to the west of our Wood Cadillac project. They're drilling 140,000 meters of drilling this year. They just started that program with 8 drills on site. Their PEA they put out earlier this year showed that 22% of the recoverable ounces in that smaller resource they had in the PEA report to our 2% NSR on the Kawagama property. So that's pretty significant. Then if you look to the right-hand side of the slide, 100,000 meters of drilling is being done on the Nordo-West, on the overall Cartier project that, the Cadillac project that Cartier Resources has. And part of that is on our Nordo-West, East, and North claims. And a good chunk of that sits in the favorable horizon that they are drilling. So we're quite excited to see what they find there. They're attempting to expand the mineralization beyond the Chimo and the Nordo-West. And so watch that space. So if you just add those two alone, 100,000 plus 140,000, that's 240,000 meters of drilling on claims that we have royalties on. And then in the center, there's the Parbec project, 3% GMR on this one, 29% increase in resources in 2025. It's contiguous to Agnico Eagle's very large Canadian Malartic mine. This is where you want to be, next to big mines. Before I move into those 3 projects, there is one project that is supposed to go to production this year. It's a very small deposit called Bell Mountain in Nevada. Lincoln Mining has it. They're going to produce about 55,000 ounces of gold over 2 to 3 years, maybe more, because there's considerable exploration upside here. We have a good royalty there at 3% GMR, so this will be significant to us because gold's at $44,000 an ounce. So watch the space when this thing starts producing. So I mentioned the Kewagama and the New Alger royalties. They sit on what is the O'Brien Gold Project that Radisson Mining is drilling. The O'Brien sort of sits between Kewagama and New Alger. Just to the east is our Wood Cadillac project that I mentioned. We're excited to see what they find in their 140,000 meters of drilling across that Cadillac break there. And much of that drilling will be done on the Kewagama and the New Alger property. This just gives you an idea of where the Kewagama side of things are. They haven't done a lot of drilling on New Alger yet, but they're starting to. Kewagama, the red line there, it runs through the center of this section, is the Kewagama to the right and O'Brien to the left. So everything on the right is on our royalty claims, and they continue to find more in that area and some pretty good grades, 15 grams, 14 grams, 12 grams. So we're excited to see what they find there and see if they can expand that 22% of the deposit reporting to Kewagama. Maybe it'll be much higher than that. Parbec, nothing much to say about this other than it's a really good sized deposit that's growing, sits next to Canadian Malartic. We think this is a good target for future acquisitions for the Canadian Malartic group. So we'll watch that space and see what Parbec continues to do there as they expand the size of this. The Cadillac project that Cartier is drilling. You can see the blue swath of ground there that runs from where the Chimo is, the northwest, through the Cadillac tectonic zone on the north contact. This is what they're drilling. We have a good exposure to that north contact moving across our property. We think they're going to find more mineralization there. And with drilling 100,000 meters of drilling on that project, this is going to be a lot of information coming at us in the next while and should help increase that resource. So lastly, but not least, our three option properties. One of these is the Duquesne West project. This is a project that is just north of Rouyn-Noranda, doubled the resource this year to 1.46 million ounces at 1.69 grams per ton. This is Emperor Metals. They just raised $11 million. They're going to drill 10 to 15,000 meters of drilling to expand that resource. Albright Metals, which was Bria, has optioned our Devil's Pike project. There's a gold deposit there that has 214,000 tons at 9.6 grams per ton. They're drilling that to see if they can upgrade the resource to a JORC style, which is the Australian standard. They've got antimony targets there, and they're going to look at those and see what they can do with those with more drilling. And then at Bald Hill, they are looking to put out a resource on this project by sometime in Q1 of 2026. And they're working hard to increase it to come up with a sizable resource of antimony at Bald Hill. This is Antimony Resources. They're drilling a 6,000 meter drill program right now, and this should be done sometime early 2026. Duquesne West, you can see it here on the map. Lots of zones across this project. Basically, they continue to drill to see if they can, bring these zones together and increase the size of the deposit and make as an open pitable deposit, especially. Multiple zones here. We get a lot of cash out of this. We'll get a $1 million payment in early 2026, and a number of shares as well, 3 million shares in Emperor. Devil's Pike, you can see it here, the gold deposit in the lower map, and the antimony showings in the upper two maps. They continue to be quite excited on this project. They've signed an LOI with Nova Mera. We've talked about that system for our Wood Cadillac project, and they've signed an LOI to use this on their gold deposit. So we're excited to see how things move forward there for them. Antimony Resources, you can see this consistent mineralization across the strike length that they've been drilling here. They continue to drill this. They're drilling it to increase the quality of the resource, and I think they're going to get there quite easily with the drilling they're doing. So catalysts this year, there's many, because we don't just do our own exploration. We have the option exploration and the royalty exploration. So first on the royalty side, Brunswick Mining, which has our Mirage project, or Lac-Escale as we call it. They're going to put out a maiden resource sometime early 2026. Dorado Gold is going to put a feasibility study out on the Mount Sorcier iron ore deposit in early 2026. This will be huge for us as far as assessing the value of that project. Lincoln's Bell Mountain gold production should start in 2026. ongoing exploration at the Radisson O'Brien Gold Project. This is our New Alger and Kewagama royalties. Cartier on the Cadillac Project, which is our Nordo West, East, and North royalties. Tama Gold on the Chibougamau West Block. Catalyst on the Globex properties. Ruan Merger Gold assay results any day now before Christmas. Lyndhurst their copper project drilling results. So we're going to be drilling that right up to Christmas, and we'll see what we get there. Corville Gold Project IP results. We're starting that IP as we speak. And of course, plans for the Central Cadillac Wood Project and what we're going to do on those projects and those deposits. And then, of course, from our option projects, Antimony Resources, their maiden resource on the Bald Mountain project. This will be huge for that asset and putting a value on that resource. Emperor on the Duquesne West project. They continue to drill. Toma Gold on the Lac Willem Gold Copper project. Electro Metals on the Thabie Bay Magusi project. And of course, Albright on the Devil's Pike gold drilling. So lots of drilling going on, and not just ours, lots of drilling from our royalty partners and our option partners. So just to sum up the company, we have very tight capital structure, so minimal dilution to shareholders. So when there's value created, it goes right to the shareholders because we're not going out and raising money. Experienced, fiscally prudent management team and board. We're here to make money for shareholders, and we will continue to keep that as our prime focus. Income from royalties and options. We continue to make income from option agreements, and we see royalty income. It's getting more clear what we're going to make on those royalties as time moves on here and some of those projects move forward. We have no debt, very strong balance sheet. We own all our assets. We are well positioned on major gold localizing structures such as the Cadillac Break and Dester Breaks with properties and our very large royalty portfolio. We can execute exploration programs quickly, and we can execute acquisitions and sales quickly. We have a very fully functioning staffed exploration office and no need to raise capital to fund them. And of course, we're based in the least politically risky places in the world. And with that, Julian, I'm going to hand it back to you for any questions there may be.
All right, that's great. Thank you very much for the great presentation, David. So there are a few questions in, and we have time also for maybe other ones. So if you do have one, please write them in the chat. I will discuss one specific thing with you to clear some ideas for investors. One of the biggest advantage of royalties is that when you actually invest and get a streaming or royalty, do you ever have to put money back again to maintain your position, such as if you're doing an equity investment?
No. So once you make a purchase of a royalty or one of our properties converts to a royalty, we do not put another dime into that. So that money is sunk and we're done. We just wait to collect.
And so therefore, you do not have any burn rate or anything during that time on those royalty. You just wait until it goes in production, like, for example, the Nevada asset.
Exactly. So, like Radisson, they're drilling 140,000 meters on those two royalties. We don't have to spend a dime on that. When they eventually go to production on O'Brien, we just get to collect the checks.
That's great. So another question in regard of that, you're talking, for example, could you give us the example on Lincoln, on the Nevada asset? We're talking about 50,000 ounces of gold. You have a royalty. What does that equal to into what's going to come into your treasury? Are you going to get the metal? Are you going to get money? How are you going to do it?
Well, we'll get cash. So if it's 55,000 ounces of gold, we have a 3% GMR. People can do the math themselves. It's basically a direct multiplication, 3% of the production times the gold price. So gold price is $4,000. We get 3% of that production. There you go.
Exactly. So rule of thumb, about 7 million or in those ranges. That's the calculation I made before asking you the question. And then can you walk us to what is Globex doing with, for example, that 7 million coming in the next 2-3 years? Where is it reinvested? How do you make the decisions?
Well, I think, I talked about how strong our balance sheet is. So yeah. For us, I think right now we're going to do more exploration because I think improving the quality of the projects we have that we believe strongly in, like Ruan Merger that we just finished drilling, I think is the best place for our money. Secondarily, we will look at things to invest in, whether that means buying other royalties or acquiring other properties. Jack and his team are masters at acquiring claims, so they'll continue to do that for forever. but that's cheap acquisition costs. So, whether we acquire other projects or other royalties, we're continuously looking at those kind of things. As you know, we're very fiscally prudent, so we're not going to overpay for things. So we don't always win them, but we will bid on things moving forward.
And can shareholder in the near future expect a dividend or special payments, or at one point, if there's really important royalties coming in and kicking, is that something that shareholders can expect?
I think once we have a steady stream of royalty income, yeah, sure, we would probably pay a dividend. But until that happens, our income is sort of lumpy. It's mostly option income, and that's not secured over 10 years. That's 5-year, 4-year deals, right? So I think once we see a steady income stream of royalty income, which I think by 2029 we should be there with things like Mount Sorcier and some of the other projects we have. So.
Okay. And additionally to that, you showed us ratios, obviously cash and so on earlier. Do you expect those ratios to change fundamentally, going more into exploration, or you're going to be maintaining the same ratios of exploration and then royalties, cash, and so on? And the second question to that is that obviously in Quebec now, exploration laws have changes. There's more commitment that has to be done and so on. So how do you forecast this forecast changes in the near future?
Yeah, so the new Quebec legislations make it harder for prospectors and generators. I would say it's fine for the big companies who sit on their projects, but for groups who like to bring others into their projects, it makes it more difficult. So we're going to have to be careful and watch what we're doing and be on top of our property positions. And well, we always are, but it'll be even more important going forward.
Perfect. And in terms of commodity, with the price of gold, obviously gold was a big part of your portfolio, both royalties, exploration, and so on. Do you see other commodities that you guys would like to focus on? We know there was the big hype about lithium, for example, and you guys had the OT, if my memory is correct, the OT royalty there, and you had other ones. Do you see commodities landscape changing and going away a bit from precious metal, where it's highly competitive, into other commodities?
Well, I think critical minerals out there that will become a bigger thing. Precious metals are probably never going anywhere, but we'll always be focused on the precious metal side because we're in Ontario, Quebec, and there's a lot of projects to look at that way. But things like our talc magnesium deposit in Timmins it's a world-class deposit. And we would love to bring a partner in on that. And so that's something that I think would add a huge amount of value to Globex shareholders. So we're looking forward to doing something with that. We have a number of projects that are rare earth projects, and rare earths, of course, are a topic of concern right now as far as the world, trying to diversify from China. So I think you'll see more and more of that type of topic as far as what we talk about going forward.
Perfect. Well, that was a great presentation. Thank you very much for your time, David. And you almost made the introduction to our next presenter, Mr. Louis Black. So in between, please go have a look. Globex Mining Enterprises share price have risen quite importantly in the last few months, and we wish you the best of luck, and we'll be continuing following the story. Thank you, David.
Okay, thanks, Julian. Take care.
Thank you.